Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, July the 17th, the year 2019. Let's talk trading. How long to wait? I've talked about patience. I've talked about the fear of missing out, but how long do you have to wait? Well, simple answer is you wait as long as it takes, as long as you have to. But, a lot of us have itchy trigger fingers, or I guess itchy mouse click fingers, and you just want to jump in that trade. It looks like it's going to get near that perfect entry that you've planned out, but now it's going back up, and if I don't get in now, I might miss out. But see, that's FOMO working. And so you place your buy limit order if you're waiting for price to drop, and then you go long, and then it gets close, but then it takes off, and then you missed out. So it happens a second time. This time, oh no. So rather than keep your limit order where it is, you cancel it, and then you just jump right into trade only to see it go, not only hit your limit, but maybe even 10 or 20 pips below it. Now you're underwater. Maybe you're now 50 pips under it. Now what do? Well, depends on whether or not you placed your stop loss. You see, and I know you guys know it's coming. That your risk and your money management. You already had your method. You see, your method told you this is the area to get in, but nope, you screwed up on your execution and performance because you rushed it. And then, of course, if you don't have your risk and money management in place, if you haven't set that stop loss based on your risk, then you're going to really be in hot water. So the worst case would happen is that you rushed into trade rather than waiting, and then maybe it goes and it hits your stop loss. So you have a bigger loss because you had that stop loss set on the original trade. Maybe that stop loss was still in place. Maybe you even let it double up. So you're actually going to lose more than what you had told yourself you were willing to lose. It's kind of like, you guys, if you watch my Miata videos I put out, I have a limit on how much I will spend on a Miata. And there was a new one came up yesterday for auction. A 2018 had a little front end damage. Tell you the truth, I really don't like the ND models, but hey, if I could have stolen this car for $5,000 or less, I would have definitely bought it and just turned around and flipped it. But see, I've got my stop loss, or stop set at 5 grand. I can't spend more than 5 grand on the car. So that's all the buying power I have. So when that sucker went past 5, I just sat back and watched. And it went all the way up to 14,700. Well, it's probably a $30,000, $40,000 car. Point is, did I miss out? No, because it didn't fit my parameters. So you see, that's why you have a method. That's why you do all this stuff before. You see, you have a method, and then you have to execute and perform according to that method. So you see, this is on you, this is on you, and this is on you too. You pick the method, or you come up with the method. But if you don't do it properly, if you don't repeat what you're supposed to do, you're never going to have the success, and you're never going to build the confidence and the competence, because these things cycle. Okay? And you guys know that. So just keep that in mind. You need to wait as long as it takes, no matter what. A whole week could go by and you don't enter a trade. Well, you're still trading. It's just you're not in a trade. And that's what most people don't realize, that, sitting back and waiting, you're still trading. You're just not actively in a trade. You don't have an open trade. Many people think if they don't have an open trade, or if they're not buying, selling, buying, selling, buying, selling, they're not trading. Well, you see here, we're still below the previous week's low here on the weekly chart. And you see here, all red for the year, for the month, for the week, for the day. but we took out that pivot though. And notice here, we've got the opening day range for the year. I can smush it down there. And then here's the opening day for the month. And then this is the opening day for the week. And once again, you see here, price went in to that opening day range and then exited. Now, if you were doing a daily candle, you'd be short off of a green candle. But if you were trading, say, on the hourly, you would have been able to get one of those crossovers and then take some of those pips off the table. And once again, above June, but below July opening. And in the opening range, you can see here, we are now in the opening range for the month of June. Once again, see that 2 ball there, looking for a reversal. And July, once again, there's that opening range. Inside bar traders were rewarded yesterday. Today, not in the inside bar yet. But you see, there's still a couple other pairs where there's some opportunities. And on the weekly, there's plenty, as you can see here. Euro yen, it's right now is producing a weekly inside bar. You'd have to go back to the weekly chart. No, that's weird. Did I read that right? Oh, inside bar was 1 bar ago. That's right. 1 bar ago. What was I thinking? Okay, just on the daily chart, the range 29. There's just nothing happening here except for the new beast, the pound New Zealand. If you're wondering why don't I switch to that, well, I haven't traded that maybe once or twice. I don't know its patterns. I could do it statistically, but it would take me a while to get comfortable trading. But maybe, let's see. Maybe we could do that next month together. We could get comfortable on a brand new pair and see how it works out. We can test, we can put all the methods that I show you guys to the test. So let me know if you think that's a good idea. Okay, on the holos, here's the monthly D1. You can see price drop below it and has gone above it a couple of times so far today. Here's your daily H1 lowest open. It was put in 10 bars ago, 10 hours ago. And you see here was your highest 3 hours ago. That was a nice short, producing over 10 pips. Buy zone. Here's your daily open. Here's your weekly open. Here's the pivot, which is in between the zones. So there is no bias based on the pivot point. There's only 5 pips off the open, so no real bias. So there's a long trade there that would have resulted in a stop. Here's a short trade that, or scratcher stop. Here's another short scratcher stop. Now here's a long trade that could have taken profit here. It's making higher high, higher high, higher high. See, lower high. If you hadn't exited about this point, then you should have definitely taken just a few pips off the table here. Another opportunity to buy zone trade, failed to make a higher high. So once again, right there is the level to cash in your chips. And you can see here, now we're right around that open, the daily open. No rat zone, only 28, 29 pip range. Just you see the zones overlap. So this is a day where if you're a rat zone trader and that's all you trade, you would just say, well, you know what? We'll see what happens tomorrow. I mean, yes, you could have still done some reversals, especially early in the day, but I mean, you once again, because of the way the ranges have been drying up, you know, instead of waiting for 10 or 15 pips, you might just take 5 and be done with it. And once again, the pivot here, we already took out the weekly pivot. Um, this was the monthly S1. I think I pointed out that level earlier. So we go from pivot to the monthly S1 here, hit it twice and bounced. So you see here, it hasn't closed below S1, but it has moved above it. So once again, for your pivot traders, that's about a 10, 11, 12 pip profit or more, depending on where you punched out. Oh, and traders, just remember these videos for educational purposes only. Your results may differ from mine. So remember, Forex trading can be extremely risky. So seek advice from an accredited financial professional, investment firm, or individual. The pivots, you can see we took it out. We still have this one pivot at 122.68 that we need to take out, but we're 138 pips away. But we still have what? Today's Wednesday. Yeah, we still have 10 new trading days ahead of us. So, anything can happen. It's trading. And here, you can see not much of a range. You can see sometimes bars, hourly bars open inside here. That one didn't escape. But I think we had one over here, didn't escape. But the rest of them pretty much, I say escape, meaning it opens between the lines and it exits. So we had 1, 2, 3, slow start. Here we had one actually broke through. We had one here broke through. One here broke through. So you can see how that price action works. Now trading off the semaphores, one ball at the top, short at the line, one ball at the bottom, long at the line, two ball at the top, short, one ball here, long at the line. And just remember, when you trade with stops in place, then you know what the worst thing that can happen is. Here, the wick zone in and out, just barely touched, but you can see price is going in between the wick zones, basically within that body of the previous day's candle. So that means we're going to be working on an inside bar on the daily, so look for a breakout tomorrow, which would be Thursday. Here, right here, you can see barely touched that line, almost touched it there, and then price rejected. Not much happening. I mean, once again, we just don't have the volatility happening. And you can see that here on the Einstein line, not much. Had we opened the chart back here, might have had a nicer trade. But you see, everything's relative to when you open the chart. Is price up or is price down? Based on what you see. First trading day of the week range, you can see we're below on the weeklies. Here, looking at those inside bars, there's the last one. You can see how price exited out of it. Should probably put the inside bar indicator on there that draws the horizontal lines and frequency distributions. The range for the week, 75, for the day, 29. Once again, average is over the last 24 days is 166. So you can see we're just not getting that range. Open to low, high to open for buy zone traders. And here on the range, you can see average range. We're only 43% of average at the moment. And current range is only 29. That's only happened 3 times out of the last 100 days. So it's just one of those slow days. So that's it, fellow traders. How long to wait? As long as you have to. And waiting is part of trading. And just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks and hit the subscribe button and